Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to start by pointing out that yet another central bank has given in. So the Polish central bank has decided to halt its rate hikes. So this is yet another central bank to pivot. I've been calling for this Fed pivot. Maybe we get it, maybe we don't. But one thing we do know is all of the other banks that have started to pivot already, they led the rate hiking cycle. They were our heads up to let us know that the Fed was about to start hiking rates, and now we are seeing them start to pivot. Does that mean that is our heads up to see the Fed pivot in the near future? I think so. The world's largest banks have asked for a 5% Bitcoin and crypto allocation cap in a letter to the Bank of International Settlements, which is of course the central banks to central banks, the central bank boss, instead of a 1% suggested in June. So if this is the case, then that means there's 9 trillion about to flow into Bitcoin from these banks alone. What's noteworthy here is that the current crypto market cap is right around $1 trillion. So this will be a 9x inflow. This will put us at a $10 trillion market cap. And that is just shy of the market cap of the gold market, excluding paper derivatives. Speaking of gold, Bitcoin's correlation with gold is the highest in more than a year. Are we going to see Bitcoin start to trade more like a digital gold? Are we going to see it start to behave more like gold than a risk asset or the Nasdaq? That remains to be seen, but the data does not lie. The British multinational universal bank, Barclays, has said that they remain positive about Bitcoin long term, and so do I. Bitcoin's volatility, shown in the red, has been compressing all the way back since July. Meanwhile, the S&P's volatility in the blue has been expanding. So usually when you see a volatility compression like this, it's a massive move. So the question is this a massive move down, like everyone thinks? Or is this a massive move up? My bias is that it will be up. That remains to be seen. Looking at the charts from 2019, you can see that we are actually seemingly repeating this fractal exactly. We've just made a higher low. I think, as you know, if you've been watching the channel, we're going to roll over one more time into the second week of November, and that becomes the cycle low. I have no idea whether that is going to be a higher low, an equal low, or whether it sweeps this low. Almost sure that it's not going to sweep the low and that this low will end up being the ultimate low. But it doesn't really matter where that low forms. That low, for me, is the signal to go long and strong, ready for this next bull market. Valkyrie is going to offer Bitcoin to retail investors through separately managed accounts, SMAs. So again, we are seeing continued adoption, and I'm sure we will continue to see continued adoption. According to Bloomberg Intelligence, Bitcoin is going to outperform most assets when the economic tide turns, and I think it's going to turn a lot quicker than most people think. I'll show you, I've got a lot of data back here that I'm going to get to in a minute, and that aligns with this idea. Twitter can become a payment app by adopting Bitcoin. Users could buy coffee and check out at Starbucks or send remittances across the world using just the Twitter app. Jack Mallers explains that Elon Musk has the opportunity to disrupt big banks. So I'll play this clip really quickly.
Of course I do, Kelly. You know me. I have lots of points of view. No, I hope this comment doesn't go over people's heads, Kelly, but the old payment networks, these payments are debt promises, and that's why banks have such an advantage in the old card processing systems, is because they're traditionally required to be on the paying side and the merchant side. Now, all of a sudden, we have an open payment network that does not need the concept of debt to settle. The messaging system is the settlement system. It's all in one because we have, for the first time ever, a digital bearer instrument that could settle at the speed of light. Now, a lot of word salad. What does that mean? That means anybody in the world could build payment experiences on top of it. And so if I'm Elon Musk, I have a global audience and a global network in Twitter that already inherently lives on the internet. What's to stop me from Twitter users checking out at Starbucks? What's to stop me from users remitting money through Twitter? He has an opportunity to build payment experiences, which traditionally Twitter can't, because they cannot get into the business of debt and all the regulatory and fixed costs. Chase has that business on lock, and now that is not a requirement anymore. That is why this is such a big deal. So I think with the right leadership, Twitter could be a payments business and have a lot of advantages over an incumbent like Chase.
So of course we're seeing Elon Musk moving to buy Twitter at the moment. Is this what's coming? I think there could be a potentially darker side to this one app to rule them all with a social credit score and a central bank digital currency. That remains to be seen. Of course it will, if it's going to happen that way, be ushered in under the guise of promoting free speech. But that remains to be seen. For now, if Bitcoin's being adopted, I'm happy. Rural Texas counties are courting Bitcoin mining companies to boost local economies, according to the Texas Tribune. So this is really good to see. And of course, we've just seen the hash rate hit a new all-time high. Speaking of mining, the largest Bitcoin mining facility in the world has 4% of the hash rate. So this is as decentralized can possibly be. The US debt has just passed 31 trillion now. 31 trillion. 10 years ago, it was just 20 trillion. I say just. But that's a massive increase in a decade, okay? I mean, it took all of this time since the 20s to amass 20 trillion of debt. And then it went from 20 to 31 in just 10 years. So, and it's going to, believe it or not, this is going to be 100 trillion in no time if they don't do something about this. Here it is on the debt clock. You can see here 31 trillion. That is 31 followed by 12 zeros. My goodness. Meanwhile, 60% of Americans are now living paycheck to paycheck, and unfortunately, this is only going to get worse. This is only going to, yeah, imagine when it gets worse. This is only going to get worse, unfortunately. So you better have a plan. Meanwhile, UK Google searches for savings account just hit an all-time high. The UK needs Bitcoin. It really does, because savings account, let's say, what are you going to get? 1, 2, 3, 4, 5% interest? You're not going to get 5 probably. You're really not. Maybe you get 3 or 4 if you're really, really lucky at the moment. And of course, this is in a world where if you use the CPI metric, you're going to lose 10% to inflation. So, and if you use the real world metric, it's closer to 20%. So why would you save your money somewhere to get 4% yield in a 20% inflationary environment? And of course, the Bank of England just pivoted to QE a couple of Wednesdays ago. I mean, really think about what I just said. They're printing money, continuing to print money. Where are we going to be in 12, 18, 24 months' time? We're going to be well above 30, 40% inflation in the real world if this continues. So I don't know why you would save money into a savings account. Of course, we're seeing the banks start to possibly collapse. Maybe that's going to happen. Maybe it won't. They usually always get bailed out, but sometimes they go down. Why would you want to extend your money to a bank? A lot of people don't know this, but when you keep your money in a savings account, if that bank goes broke for its own chicanery, they can take your deposits to pay themselves off, to bail themselves out. It's not your money, okay? It's not yours if it's in a bank. Unless it's in your hand, then you do not own it. And this is one of the main reasons why we Bitcoin. Credit default swaps, the insurance on the debt default for Credit Suisse, just smashed through its 2008 level. Okay, this is potentially not a good sign. I'm not going to pretend to be a CDS expert or a banking collapse expert. I see a lot of this going on Twitter. I'm no expert on banking collapses, but this is pricing in well above 4% default risk for Credit Suisse. So who knows? There have been financial recoveries from SIFIs. A SIFI is a systemically important financial institution from these levels, but they occurred in better macro environments than today. So proceed with caution. This is coming from Foss. Foss sat in a risk chair for 25 years, or 35 years, excuse me. So he knows what he's talking about. A lot more than I do. So maybe this bank is in trouble. I've seen rumors that it's going to merge with another bank. Credit Suisse is considering a merge from its Swiss and Asian wealth management business to form a 1 trillion private banking giant. So you go read that in your own time. I'm not super interested in that, to be honest. Okay, buying when others are fearful doesn't get better than this. So the bull ratio for the 20-day moving average is now its second lowest reading since 1990. In over 3 decades, we're all the way down here, okay? And let's have a look at this, okay? Retail traders put buying, which means they're betting on a crash, okay, is at record levels, as you can see right here. Record levels of retail think there's a big crash coming. Meanwhile, corporate insiders selling has plummeted. So you can see that corporate insiders are done selling their shares. So which horse would you like to bet on in this race? Retail, thinking that they're sure they're going to go down another 50%, or corporate insiders that are holding on to their shares? Okay, so I know which one I'm choosing. I'm choosing this one. The downward pressure on the dollar could be incoming. What we are seeing is shorts beginning to close their positions. And you can see that here, this metric is rolling over, meaning that smart money is likely walking away from what has been an absolutely monumental move up for the dollar. At the same time, dollar-related articles nearing record highs. So you can see here, only a few times in history have we had the amount of articles about the dollar at this level. This usually coincides with tops. The last 2 days have left the bears stunned. I'm not sure if I agree with this. This is not a stunning move in my opinion. This is just what you'd kind of expect, some level of bounce out of the mid-cycle low. The S&P 500 rate of change has spiked up to levels only seen 3 other times since 2015. This is something to be a little bit more excited. Again, not stunning to me, but all of these moves were followed by a strong rally. Time to fasten your seatbelts. I'm really looking forward to getting into the charts for you today. I've got a lot to show you, so let's do this. Just start with a chart of truth here, the 10-year yield for the US. You can see this breakdown retest. Is this what's playing out? Are we going to resume downwards, indicating we are due a Fed pivot soon, or are we going to recover this line and then carry on going? Either is on the table. You know what my bias is. The dollar, look at the dollar coming off. Is that the top, possibly? Are we about to set a trend line? Let's have a look. We've had our first warning flag as a breakdown here. Are we going to come down and test this line? I would think we test this red line at some point. Going to get rid of this because we don't really need it and it's kind of messy. But hopefully this was the top. Possibly we get a bounce off of here and go. Or if we break down from here, then you can expect risk to come on very quick. I wouldn't be surprised to see a chop around a bit because of where we are in the cycles for the equity markets. They're not due to form a cycle low until the end of the month. And Bitcoin and gold aren't due their cycle lows until a bit later in November. So it'll be interesting to see what happens in the middle. Maybe we hang around in no man's land and break down. Otherwise, I think if we hang around in no man's land and bounce, then risk is not going to come on very well. So we'll see. I want to show you something with XRP. XRP, it kind of put in this little pennant thing, didn't it? Something like this. Oh, what am I doing? I can't use the charts. It's done something like this. Is this a breakout? I don't know. You could probably be stricter with the way you draw it. Maybe you'd like to draw, some people probably like to draw it like this. I don't like the look of that. But I think it's undeniably in this pennant. Is this breaking out? It's trying to break out. So maybe we have had our retest. Did miss it, not quite to the tick, but maybe we've had our retest and we're about to start a new uptrend. I wouldn't be surprised, but for now, long and strong, continue to push. Ethereum got somewhat of an upward move here, but I wouldn't be surprised to see this drop down into Bitcoin's 60-day cycle low. So that is still almost a month away, a little under a month. Yeah, 35 days or so. Of course, this can be plus or minus 6 days, so maybe we see it a little earlier than this, around the 7th. Maybe we see it a little later. But bit more patience, and then I think we get big move out of Ethereum, if it's going to go, that is. Bitcoin, same deal, chop around sideways into the cycle low and go. I have added a couple of equities. I'll get to that in just a second. So Coinbase, just so you know the plan, I'm probably going to start accumulating once we get into the 5th, yeah, around the 5th or the 6th of November. I'm probably going to start to just nibble in a position and look for that cycle low rather than try to catch it. I often try to catch them, but given that the upside here, in my opinion, is massive, I don't want to risk missing the cycle low. So I'm going to start to just scale into my position around the time of the cycle low, ready for that move upwards. Absolutely exact same thing for MicroStrategy. I'm going to start to scale into my position around the 7th, maybe, of November, build a position around this area, ready for some upside. I've added Tesla here and Apple because I believe that if we're going to get a big move, then this will break out of this downward slope and target the top of this range, maybe 400, 440. So I know that's not a popular opinion at the moment, but that's just what I see. So it's there. And the same is true of Apple. Really nice downtrend here. This is super clean, loads of touches, quite good symmetry. So if we can get a breakout there, that becomes a long from me as well. Looks something like this, depending on when it goes. Targeting, I don't know, 200 maybe. Again, not a popular opinion, but it is what it is. That's how I see it. UKX, we had somewhat of a retest, not of this line. I wouldn't be surprised. Often it does this thing where it sort of does this a couple of times, and then we get a much nicer, because this, obviously, the steeper the angle, the more often you're going to be wrong, right? And if you've got a shallower angle, then the more confidence you've got. But of course, you make more profit coming out of here if you're right, versus a less steep angle where you make less profit with more confidence. So I wouldn't be surprised if we get some sort of back test. I think a little bit more patience with this. An entry could definitely come above this high if you could get it. But I would like to see maybe a double bottom and then buy that from down here. So I'm going to continue to play patient with this because the risk reward from up here would have to be something like this. And as you can see, it's just not nearly as attractive. So a bit more patience. Happy to let that one go because I know there's absolutely loads of opportunity coming up. VIX continues to look like it's cooling off, so I wouldn't be surprised to see a move back up and then go, but we'll see what happens. Nasdaq, look at this. This is nice and clean, isn't it? So probably going to come in for a touch of this, roll over and then go, and that would align very nicely with the S&P 500. I've shown this scenario here. We have to be open to making a new low, but I've just not really, given the data I've shown you and everything else I've been talking about for ages, I'm not really convinced we're going to get a new low now. This here would have been the opportunity to break lower. We had consolidation along the low, then we dipped below, and that seems to be functioning as a spring. So if that was a true breakdown, you would have seen this open up and start to waterfall out of here, but of course it hasn't. So for now, chart looks a little messy, but you can kind of see what I'm thinking. I think we get some sort of bounce, some sort of chop around into this cycle low here. That would be a day 36, maybe a bit early, 37, 38. You expect somewhere between 38 and 42. And then into that low. Once I've seen that low, I have a lot of confidence buying this. If we just completely shoot out of here, then the long has to come from a trend line break up here, but I personally don't see that happening just yet. So a little bit more patience is going to be rewarded. Oil, I don't like the risk reward here. I don't see this going much higher than the high 90s to 100. So you'd need quite a wide stop here. I mean, that's only a 1.4 to 1 risk reward. That's not the sort of trade I like to take. If you've watched the channel before, you'll know I like to try and get a lot more of a risk reward than that. So if I see an opportunity from oil, then that is something I would let you know about. But for now, I've just spent an awful lot of time watching this market and not a lot of time trading it. I do think, though, I'll draw this on for you. If we get a move that does something like this up to high 90s to 100, I think that becomes a short and then we roll over. So we'll see how that goes. I will make sure I update you as and when I see something tradable for oil. Gold, look at gold. So gold, breakout retest, working on that resumption. If we can get a breakout above here, particularly if we can clear the high back here from 2 days ago, above that becomes a long for me. I'm still mindful because the cycle count tells us to expect downside into this cycle low, and the weekly cycle low isn't due until this November-December timeframe either. So the bias from a cycle point of view is down, but if the dollar has topped, if the dollar is not going to continue to run, then this likely will break out, and this has to be a long that's respected, targeting at least 1960. So that's more of the risk reward I prefer to take on my swing trades. That, as you can probably see, looks a lot better than the oil or the FTSE 100 that I lined up a minute ago. So this is something I'm paying attention to. If we continue to move along maybe for a couple more days and then we close back down here, that would be a short for me, targeting all the way down here. So I'll let you know what I decide to do. Silver, what is that? I don't know. It's too far up, too far down. It needs a bit of time to consolidate, I think, and then perhaps we can target a breakout above the high, or likely it will come back down here. But I think I'm going to focus on gold for now because this setup is really, really clean, as you can see. So really nice setup, really clean look. Breakout retest resumption, hopefully, or perhaps it rolls over and then we can short down here. If you found value here today, I'd appreciate it if you could drop a like on the video. Subscribe if you're not already. Go ahead and follow me on Twitter. Hope you're doing well in life. Trade safe up there. There is some data coming out. Well, we got PMI and non-farm payroll. So we'll need to keep an eye on that. That will be market moving, although ultimately I don't think it's going to have too much impact in the longer term. I think that ultimately we need to keep an eye on the dollar and yields. Got to be mindful of the cycles as well. We know where the counts are, so just got to keep an eye on those. And then I think we got some trades coming up at the end of the month. So until then, take care. All the best from me. Cheers. Bye.